In the studio with me is Jacques Botha, who's the chief economist at Afri-Foresight. This is quite a headline, Jacques. Look at that. I don't think it's over-exaggerating things, though.
That's how people. It's not. It's definitely showing how people feel. I don't think that's the outlook. I think it's over-exaggerating the negativeness of the outlook. The outlook is not that bad.
Let's start with the commodities themselves, because if you dig something out of the ground and the price of that commodity that you dig out the ground goes down, it's got nothing to do with you. I mean, you're part of the big picture, but you can't control that. But is the South African mining industry controlling what it can control well?
It's getting better. It's definitely getting better. I even sense that there's more of a realism amongst the labour players, and government is also really trying to help the industry. Everybody realizes this is definitely, we're at the bottom. That depends, can we go further down or not, or whether we can now go sideways and lift later. So I think South Africa is aware of it at last, that things must be done. But as you say, it's about the commodities, and it's ultimately the big thing is now the price of all our commodities. Yeah. And that's the question. There is what. This has been the last few quarters has just been seen as decline, a constant decline of every commodity. Which one has actually not declined? But for various reasons. Adam Smith, you can teach anybody economics if you just let them understand supply and demand. Now, many of them are actually not demand, like us economists think naturally it's a demand. It's also, as now people realize, supply. Yes. And let's look at our one commodity, iron ore. The iron ore story was definitely a supply story. After the big crisis, the world economy collapsed. China panicked, and they did a good thing at that stage, and they lifted the world by going heavily into infrastructure investment, and commodity prices went up, iron ore and the likes of that, coke and coal. And the major iron ore producing countries built incredible infrastructures in the late 90s.
Western Australia, for example.
Yes. And Brazil as well. So they are pumping iron ore and coke and coal for the steel plants. And that, unfortunately, has created a total oversupply. Everybody realizes it now. And the iron ore just came crashing down. The interesting thing of iron ore now is actually the price. The Chinese could actually get much cheaper iron ore if they want to. But it seems they're now doing something. They are sort of saving. They don't want to kill the golden goose. They're actually helping the guys. The iron ore price is now back at 50. So all the guys that have left are now making money. Some people say it could be they're getting ready for the Third World War, and they want enough iron and steel. Interesting on that story is actually, I think it's incredibly positive news that China should put its hand out to Japan about that conflict about in the East China Seas. And for the first time,
semantics. I want to look at the big picture in this relatively short interview, Jacques. And I look at my screen now, and it says here that Brent crude oil is $52.93 per barrel. And if you take the biggest commodity in the world, the one that we all use every single day, directly, indirectly, or obliquely, it's Brent crude oil or West Texas Intermediate. It was $67, $68 a barrel 3 months ago. It's now below $53 a barrel. That, to me, is a proxy for the whole sector, and it looks really, really dangerous to me.
Yeah, but that's also good for the sector, by the way. And that's the problem. People are now equating gold and copper and oil. But they're totally different, and they have totally different impacts. The fact that oil is down is actually very good for the mining industry, low cost, very good. Oil we see moving between 50 and 60. That's a long story. Maybe we can talk about that another time, and only slowly. Our commodities, iron ore seems to be now going to. The Chinese wants it to stabilize where it is now. The people that are in the business are staying in the business. It seems like it. In many other commodities, the prices are still falling, and people are going out of the business. When people get out of the industry, that gives less supply and allows the price to stabilize.
Diametrically opposing each other in terms of commodities and the way they're brought out the ground is iron ore in Western Australia and platinum in South Africa. In South Africa, we've got these deep mines. We've got labour problems. It's incredibly expensive to get it out the ground. In Australia, you can go out there with a shovel and stick it out. I mean, it's there. It's lying on the ground. I'm being simplistic, but you know what I mean. So they can ramp up their production in order to increase their volumes and their and therefore maintain their revenue. In South Africa, we can't do that with platinum. It's too deep, it's too expensive, it's too onerous for the government and the unions, etc.
But even in Australia, the guys are not ramping up now. They're slowing down now, because the volumes are not increasing. But in South Africa, interesting, that was the problem. But it seems now the last 2 months, the platinum production has actually been declining, because they also realized that the price, by producing too much, is also pulling down the price.
Yeah.
So they're even controlling that. And platinum is very easy to control. It's only South Africa to control that. That's a short thing. I'm actually quite bullish on platinum. There's another reason as well. Very long
term, and we're going to have to pick that up. In fact, I want to do a platinum show with you at some stage, Jacques. But thanks very much for popping in this lunchtime. That's Jacques Botha, who's the chief economist at Afri-Foresight.